Welcome everyone to the URA and KIZ Resources LLC webinar. It's a webinar of a series we've been doing over the last few years. We're focusing today on the Keystone Innovation Tax Credit, KIZ, as well as the Research and Development Tax Credit in the city of Pittsburgh. And we're going to tell you a little bit about some URA resources and business solutions that we can help developers with and entrepreneurs in the city of Pittsburgh, and things you can reach out for us for, things we can research for you, some front door services to things to access in the city and the region that might be helpful for your expansion and growth of your companies and your development projects. So welcome, and we'll just begin to take a look at these. So this is what we're doing today, the Keystone Innovation Zone and Research and Development Tax Credits. And the services that I wanted to talk about, the Concierge Business Solution Services. When this unit was created, working in multiple areas of core missions of the URA, we're looking at, of course, workforce development, affordable housing, equitable development. We were looking at our business districts and trying to find ways when people come to the URA to partner with us, or looking for gap financing, or looking for resources in the region to help their developments, business startups, build outs, site relocation services. This unit was created to be outward facing and inward facing within the URA to help you navigate the city, help you navigate the URA, be able to take a look at what is available and the application periods for various programs. Make sure you have the material you need to apply for the services that are available to you, tax credits and state programs, federal programs, local programs. You saw the URA move very rapidly during the COVID response to helping people with loans in the PPP, Emergency Loan Fund, and the COVID Recovery Fund that we have now. And there were many tools that we put together, webinars to help businesses open, reopen, go online, grow online. A lot of technical assistance was offered with our programs. So we're really proud of what we've done over the last year and accomplished, and really look forward to the growth and the recovery going forward. So what you see on your screen are just some areas that we can assist you with. Site location services, looking for properties in the city to develop, city-owned or URA-owned, or even some that are privately owned, but are working with us in programs to try to help find tenants with some particular lease terms, or commercial rent relief programs that we have operated this year as well, between landlords and tenants to subsidize some of the rent reduction that's been offered by landlords through the city. We have work development programs that are going on citywide. That's part of our group. And of course, you know, Josette Fitzgibbons, manager of the business districts, working with the city. And I want you to know a little bit about our URA loan programs. We have a new tool that it's been out a while now. It's called a Pittsburgh Business Fund. And it goes up to $150,000 for some gap financing, very reasonable terms if you're looking for gap financing for your developments. Also, we have an ABLE loan that's it's Accelerator Business Expansion Loan, ABEL, and it takes borrowers from some of our micro loans, $30,000 loans, to up to $150,000, and then the PBF loan takes you beyond that to $500,000 potential gap that you're trying to bridge. We also are the underwriter for the PETA loans with the state, DCED. And this usually involves buildings and land remediation, rehabilitation, build out for your building, soft cost, architectural, engineering costs. But that has to go through an agency that's certified to underwrite those loans. One of our subsidiaries, PEIDC, within the URA, is a certified economic development organization that underwrites those loans. They've condensed that program for some of the larger brownfield and environmental industrial projects of $2 million of loan you could get, or Some of them are 2.25 million. But also your business expansion and build outs can go up to 400,000, 500,000. Equipment, F&E and your equipment can go up to 4,000, I think it is. There's lines of credit for payroll and inventory. So you want to investigate these opportunities. So we're trying to help people find ways to learn these programs, go through the application process, go through the loan review committees. Also the RCAP, the rounds of the RCAP come out year by year. And our project managers help facilitate the application process for the RCAP. Today, we also new market tax credits happens in our lending and investment group. And that's something we don't deal with in business solutions, but Rebecca Davis Wagner, I think I get the names backwards on the double name, but Becky can walk you through the new market tax credits. We'll probably have a webinar on that in the future. So we've been covering in this series the enterprise zone, the opportunity zones, innovation zones, and the community impact NAP tax credit that you can get for nonprofits. So I'm not going to move into the tax abatement programs, but just so you know, that our project development team is working on the TIF and the TRID and some of the city abatement programs that or the portion of it that may still be active as far as LERTA. So those are the services that we can help you with, the products and tools that you can apply to your project, and we can help you assess which ones will apply for your particular eligibility and use. So don't hesitate to reach out if you feel we can assist you. So I want to say a little bit about KIZ. And KIZ Resources, who's worked on this series with us for the last 2 years. They're a full-service government incentive firm located in central Pennsylvania. Their primary focus is on Pennsylvania programs. The mission is to provide clients with superior service in all aspects of obtaining, purchasing, and selling tax credits. That selling is very important. Also, the technical assistance in the application. I've had many people that work with them with the application and then brokering the tax credits. They strive to foster and support a successful and stable business community throughout Pennsylvania by working with local businesses, development agencies, and nonprofits. And I don't know if Lindsey wants to say anything about some of the HR services. I know I saw in your newsletter, it's quite interesting, but she may be able to mention that. So Lindsey's going to be our presenter today, Lindsey Bennett, and she's an expert in this area. Lindsey Bennett's a tax credit specialist and serves as the operations and marketing director for KIZ Resources. This position allows her to work with a wide range of clients and programs by providing education on available incentives and assisting with the application and sale processes. So I don't want to take any more time away from her expertise, so I'm going to stop sharing my screen so Lindsey can pick up and move into the innovation zone and the research and development tax credit. So Lindsey, I've stopped the share there.
Thank you so much, Charles, and for coordinating and organizing these seminars. It's always great. I have been able to enjoy in the past being able to get out into all the different cities and areas in the community and do these live. So we appreciate the technology that we can still see each other, sometimes face to face. Usually when I do these, I like interaction. So please, as you need to, put questions in the chat box. I'm happy to answer questions as we go along the way. But yeah, thank you for having me. KIZ Resources is a company that started back in 2006 when these incentive programs were just kind of getting underway as far as them being transferable. The research and development tax credit had been around for a long time. Federally, I think it had been around since like 1983 or something like that. And Pennsylvania started their program, I believe, in the late 90s. And then they made it transferable starting in 2003, 2004 applications. And at that time is when the Keystone Innovation Zone program started. So we kind of got our start from there. We had some clients, the owners of our company had some clients that were eligible. It was an accounting firm that was eligible for these programs. and they did some research and found that there was, you know, a void as far as understanding how the applications were processed and then how to go about selling them. So our company was established from there, and we've kind of hit it hard since then with exploring all of these different programs. You can see the alphabet soup of acronyms there for all of the different types of programs that we work with in the state. These are the most popular ones, and some of those names you probably look at and are familiar, like EITC. I think everybody knows a little bit about the Educational Improvement Tax Credit. Historic tax credits you hear about a lot. My mind's been focused mostly lately on the Neighborhood Assistance and NAP EZP, because those applications are going on right now, but I'm excited to transition into the Keystone Innovation Zone and R&D stuff here. That's kind of the main focus of our company most of the time through the year. So I'm going to get right started in it and try to keep myself on pace and not run on too long here, so we have time for some questions at the end and discussion. The Keystone Innovation Zone program is something that, again, was started back in 2004, and it was established to designate certain areas throughout the state. There were 29 zones that 2 of them have now merged. There's 28 zones throughout the state. They're established around the Pennsylvania's colleges and universities in areas where they felt the need to encourage and foster more entrepreneurship. What the state was seeing is we have really great universities who are training good, fast thinkers and entrepreneurial minded people and community minded people that are now leaving the state and going to Boston or out to California somewhere to find jobs. So they wanted to create an ecosystem to keep those students that have graduated here, to have startups where they can get jobs, to encourage startups to happen, to create and foster more innovation and more innovation. The biggest benefit to the program is this tax credit that we're going to talk about. So the tax credit can be up to $100,000 in tax credits per year. So before we go any further, let me explain what a tax credit is in this case. So a tax credit is different than a tax deduction. We all hear about the federal deductions you can take. You know, if you make donations, you can deduct some of that off of your tax returns, etc. A tax credit is actually a dollar for dollar benefit against the actual tax liability that you owed. So if you have $1,000 tax credit, you owe $1,000 to the state of Pennsylvania. You don't have to pay that. The tax credit covers it and it saves you $1,000. Whereas a deduction just lowers your taxable income. So it's not dollar for dollar. So these tax credits, what's nice is a lot of startup small companies, small businesses don't pay a lot in PA taxes, especially depending on how your tax treatment is. So they've made them transferable, meaning another Pennsylvania state taxpayer can purchase that credit from you. It's usually at a discount unless there's some other kind of relationship in there. And they get to use that credit on their taxes, and you get cash into your business that you can use for whatever you need. Most companies reinvest in either more equipment that they need, use those funds to help with payroll or add an employee or support an internship program to support their development, those types of things. So each year there's $15 million available of these tax credits. And when the program started, there was 25 million. And at that time, it wasn't being fully funded. So a few years ago, the legislature had decided to lower the total amount down to 15 million. Usually what they're seeing right now is about 18 to 19 million in applications that they can get up to. I imagine in future years it will go up. I'm sure this year with COVID, the COVID-19 crisis is going to definitely dramatically change the number of applications we're going to see. And we'll get into the calculation and why that, what that is. But it's definitely a program that is utilized, sought after, and important to these small businesses in their growing stages. So how do you qualify? There are 4 main eligibility criteria. The first one is you have to be a new to startup company, so in operation for less than 8 years in business. And that's from your EIN incorporation date or your Pennsylvania registration date if you did your PA registration and got your PA numbers before you got your EIN number. At the end of 2020, the IRS had shut down the EIN office for a little bit. So there was a little bit of some hiccups there, waiting on getting your EIN notifications back. But so less than 8 years, you have to be physically located within the zone. The zone boundaries are very described and specific throughout the 28 zones that are available. And the DCD's website has lists of where those zones are in general, but they don't have specific maps. Each zone kind of maintains their own maps. You have to reach out to the coordinator and find out if you're in the zone. The third thing is you have to be operating within a targeted industry. Those industries are pretty broad. They are things like advanced or diversified manufacturing. That can be any type of manufacturing, food related, or other, other industries. It is also based on, my daughter's trying to come in and I have the door locked, so my husband will be coming to get her soon. One second. The other industries, so manufacturing, and then business services, things that assist other business to business relations, marketing, SEO type things like that. High technology, where you're making, nanosciences and different technologies that are being created, as well as life and biosciences are the four main categories of businesses. And then the fourth component, which is kind of key to making sure that you actually qualify within those industries, is that you have your own IP, your own intellectual property that you have developed and created that helps you stand out from the crowd in your industry. So it's your secret sauce. Doesn't mean that you have to have a patent. It could be something that is copyrighted or licensable, a trade secret, something that is yours, you developed. It's not just you're reselling a product that you can get anywhere from off the shelf. If you are tweaking things and doing in the software industry, doing your own upgrades to make it more functional or serve a different purpose or a different audience, those types of things qualify. The way that you apply for the tax credit is via the state's single application for assistance. So that's an online application that DCD uses for all of their programming. And we'll get into that a little bit more, but it's interesting because they use that app for every type of program. It is a little confusing when you're looking at it for the KIZ program. So we assist companies with navigating that process. So once you've established that you are, an eligible company, you're located in the zone, you get in touch with the local KIZ coordinator, you are going to have kind of this timeline till you get to your actual tax credit. So every company has a base year that's of when they start out in the zone program. The base year starts from the time that you enter the zone address. So if you had started your EIN at the beginning of the year, but you don't move in until the fall, or if you started your EIN in 2018, that starts the clock as far as 8 years in business, but you didn't move into the zone until 2019. 2019 is your base year in the zone. And that doesn't have to be a full 12-month year. It can be a portion of a year. So you can move in the fall and have just, 3 months count as your base, whatever you move in is fine. Your second year is your comparable year, which is your full revenue year of growing your company. And that's what you use for your calculation, year 2 minus year 1. So finally, in year 3 of being located in the zone, you get to apply for your first tax credit. That's looking at your second year's revenue minus your first year's revenue that's being reported from the time spent in the zone. And it's 50% of that increase, up to $100,000 in tax credits. So if you increase by $200,000 or more, you'll maximize the program. The deadline for applications is September 15th. It's hard and fast. There are no exceptions made. You have to have it in through that online system by September 15th. If you're an hour late, 1 a.m. instead of 12 p.m., it will not be accepted. The award letters usually are mailed out December 15th. This year, they actually started emailing those award letters. They were a little bit late because of that, but that's typically when they come out. Once you have received your tax credit certificate, that is when you can either use the credit against your PA liability or sell the credit for cash. The tax credit itself can be used against your personal income tax if you're a flow-through entity, or your corporate income tax. Give me just 1 second here.
Lindsay's having to.
Okay.
Enlist
Having a
help.
mom moment. I apologize. This is the thing with the with the Zooms, right?
Yeah, no problem at all, Lindsay. Thank you.
They want a snack, but my husband's taking care of it now. So, so once you have your tax credit, you can use it against your corporate tax liability. If you have PA corporate tax liability, it can flow through to the personal tax liability of the owners. It does have a 5-year carry forward, so you can use it over time. But what most companies do is sell the credit. They're going to be in the program for a while and receiving additional credits. So they want to sell that credit, get that cash into the company. Once they file their tax return and prove they can't use it. And we assist with that process. One of the key things to maintain your status in this program is you have to do this KIZ force reporting requirement. It's every 6 months that you do this, and that's what this slide is about. So the KIZ force reporting is the way that the state gathers information about how this program is working. So when they report to the legislator to say, it's doing its job, they have real numbers to work from. So these numbers do not have any impact as far as your actual application numbers. Your application is done completely separately in September. This KIZ force reporting is going to be done through a Salesforce application every July and every January, looking at the prior 6 months. So you will fill this out online, or if you miss it, you can use this Excel document that the coordinators have available to give you. But really, it's just general information about the company. What's your current employee count? What was your payroll numbers for the last six months? Did you create any new jobs during that time or hire new PA grads? Did you receive a KIZ tax credit or any other state funding, any other outside funding that you've received? And then what kind of R&D were you spending money on? Did you file for patents or any of those types of things? These, again, are not audited numbers. I recommend people, they have to be done, and you want them to be as accurate as possible. So we're giving a good picture to the state about what's happening within the companies, but you really want to spend like 15, 20 minutes on them and just make sure that they're done. If you don't have these done, when you go to file a tax credit application for your actual credit, they will not actually award it until this is done, and you only have a set amount of time to do any back reporting. So you want to make sure you get them done as soon as you can. So I'm just going to take you through a really quick example of what a KIZ company is. There's some nuances that we could go into as far as the way the credit is calculated. It can get more complicated depending on each company's situation. If they have multiple locations, some of their activity is within the KIZ zone and some of their activity is outside of the KIZ zone, for instance. But in general, if a new company has started their pre-revenue and they decide to move into the Keystone Innovation Zone at one of the shared office spaces in downtown Pittsburgh, and they signed their lease in December of 2018. That 1 month or 16 days, as I have on the slide, can be their base year. They meet with the KIZ coordinator for that zone and get established and get listed in that KIZ force system. In year 2, 2019, they are just working away, chugging away and generating some revenue, and they are able to generate up to $200,000. In 2020, they keep working away. They're doing their KIZ force reports and generate up to $300,000 of gross sales, not profit and loss. So you can be, you can have a loss at the end. It's the number one line, gross sales. Those gross sales can come, of course, from the sales of your products, but it can also come from grant sources. So grants from any source that you've received into your company that's reported on your tax return can count towards your gross revenue number for generating tax credits, as well as any business plan competitions that were won by the company. And it does have to be a for-profit company for this program. So what those numbers generate to would be in the first year that you're eligible to apply would be 2020. So you would have applied last year for a credit based on your 2019 number of 200,000 minus your 2018 number of 0 revenue for that shorter period of time you were in the zone, and receive a $100,000 tax credit. Once you file that 2020 tax return, which you might have done already if you're in a business and filing on time, you can start the sale process and get cash for those credits. So in 2021, you will apply again for credits based off of your 2020 revenue, which was 300,000, less the 2019 revenue, which was 200,000. So a $100,000 increase times 50%, of course, is that $50,000 tax credit that you would receive at the end of 2021 and be able to sell then in 2022. Now, during this time, you have to maintain property in the zone, whether that's through rent, or if you own the building that's in the zone, as well as payroll in the zone. You can't just have a mailbox and not actually ever go in and use that office space. You have to have physical, real hard space in the zone, which right now, due to COVID in 2020, everybody was working remotely. As you can see, I'm working from home today. In 2020, that was required. We needed to do that to keep everybody safe. Going forward, at some point, the state's going to release more information about, they want you to get back into the office. And the purpose of that is to really work with that ecosystem to generate new ideas for companies to work together and collaborate on things, and to just have those innovative growth opportunities. So in Pittsburgh, there's actually 2 zones that you can locate in. The first is the Pittsburgh Central Zone that I'm going to talk about. The Riverside Center for Innovation is the coordinating organization for that, and Siobhan Hall is the local PC coordinator. So it's all throughout the Central District. The URA has a map available of this zone, and the Pittsburgh Tech Council also have searchable maps of both of these zones. But it's, as you can imagine, kind of the downtown regions, a little bit on the North Shore, and a little bit on the southern side along Carson Street. The Greater Oakland Zone is more on, of course, in the Oakland area and outside of downtown. That is run, the coordinator for the Greater Oakland KIZ is the Pittsburgh Technology Council, and Melissa Becker is currently the zone coordinator contact there. So there is space along like CMU and Pitt area, outside that technology center, a little bit north of the city is available as well, and then some areas along the south side. And then these are just some numbers. The last 2 years of credits that were given to Pittsburgh companies. So you can see a large chunk of money is coming into Pittsburgh through this program and helping these companies to really progress and further their developments, to grow their companies and cover payroll expenses. So in 2019, just in the PC zone, it was 1.7 million, and last year in 2020, it was almost $2 million that went to the PC zone companies. And then the Greater Oakland Zone added another over 1.3 million in credits that went to the Pittsburgh companies in total. So it's definitely real dollars that can really get in and help a startup company. Before we move on to the research and development, I wasn't able to get the chat up right now, but were there any questions on KIZ specifically? I can see if I can get my chat to.
Yeah, I'm not seeing a posted question, Lindsay. We've got our emails from participants, and I'm not seeing a question there. Or
Yeah, Lindsay, there's no questions so far.
All right. Well, if you have any other questions about the zones or need an introduction to the coordinator or want to know if you're in the zone, please be in touch. It's a really great program for startup companies. There is currently some legislation at the state looking to expand the program in a couple different ways. One, in relation to in response to COVID, kind of because it's based on revenue increases, and a lot of companies in 2020 had to stop operations, lost customers because people couldn't, if other companies had to make decisions internally about what services and things they were using. They're looking at some legislation in response to kind of you wouldn't have an increase in gross revenue when you're not working, able to work. So they're looking at some legislation there. And then there's also some general legislation that might be coming online that might update some of the timeframes as far as when applications are due and when credits will get awarded, to allow the state a little bit more time to review these credit applications. They get between 300 and 400 applications a year, and there's really one person at DCED that reviews them all. So we want to make sure that you have everything in a row so it's easy for them to track when you're applying for this program. So moving right along then to the research and development program, it kind of goes hand in hand with the KIZ, because if you have intellectual property, you created something, you developed something, you spent money to do that. But really any company in Pennsylvania that is improving or creating new technology can qualify for this. And it doesn't have to be something that's brand new, never before seen. It is those incremental improvements to your product or to your process that you're spending real dollars on, that will help you to stay competitive in your company. So it can, of course, be something brand new, never before seen. But the purpose of this program, when it was established at the federal level, was to raise whole industries. So to kind of create that friendly competition of, some companies doing something better. We have to figure out how we can lower our costs so we can be more cost efficient. And then they came out with a new whatever. How can we make ours faster or whatever? So it just raises whole industries where you're spending those dollars to do your research. There are four key things to know if your projects are actually qualifying. The first thing is that you have to be at financial risk. So if you are fully reimbursed for your research that you're doing, whether it's through a grant or some sort of federal funding source, or somebody's just hiring you and saying, I'll pay whatever your expenses are, give me your list of expenses and I'll give you money to keep going and further this research, then you're not at financial risk. Obviously, somebody else is footing the bill for you. So you can't also receive a research tax credit for that. But if you are operating on a fixed price contract, so like contract manufacturers do this a lot. They'll send out a bid. This is what, we're going to build this widget for you, or do the tooling for your product. This is the price. You get it back. You do the development, spend the money, whether it's on materials, the time spent of the employees fixing and tooling the machine to get that mold that you need to make for your client. And you, of course, hope that you're coming under budget so that you can make money on that product. But if something goes horribly wrong and you have to put more money into it, you can't go back to your client and say, oops, we made a mistake, we need more money. You're at a fixed price. They paid you for your job, and then your work there is at risk. And similarly, whenever you're putting your own money into a project, maybe you're funded partially by a grant, those grant funds wouldn't count, but anything above that you're spending from your own money would count as well. So it must be based in hard sciences. It's not just like a survey of, what color preferences there are for your product kind of thing. It has to be based in hard sciences and have uncertainty at the onset of the project, and then a process of experimentation that you can track throughout. So it's called the 4-part test. And whenever we assist with companies to try to help them break down whether they're doing R&D, we go through this 4-part test and use their real world examples and some specifics about their project and what they're doing and how they solved a problem, or tried this and it didn't work, so they went to this different method or a different material to make it work. There are three main buckets of costs that qualify for an R&D project. The first and largest one is usually wages. So the wages of the employees that are actually doing the R&D work. It could be, a software engineer, somebody that's actually, building something in your factories, any type of engineer or worker that's actually developing and creating something. But it can also be portions of some of the management's wages as well, if they're overseeing the R&D and there's meetings and intake from your clients and feedback from your clients that they're spending money on to make sure that it's going in the right direction, and running tests and that different things aside from their jobs. You just have to differentiate what's being spent on development and what's being spent on other administrative type work or marketing and sales type work. The second bucket of costs is direct supplies. So any wasted materials that are going in. So this typically happens in a manufacturing setting there's not as many supplies in things like in software type development, but any supplies that are used up during your process of experimentation of your R&D counts towards your R&D number. And then the last bucket of costs is your subcontractors that you're hiring out. So anybody that you hire out on a 1099 basis would be 65% of their time you can count towards your R&D expense. So for a startup company who's only paying subcontractors to do their development, if they end up hiring that person from their first year into their next year, they've just increased their R&D automatically, because you can take 100% of what you're paying somebody that's doing R&D, 100% of their time doing R&D versus 65% of the R&D. The other thing to note with wages for key employees that 80% or more of their time is spent on R&D, there's an 80% rule within the program guidelines that you can count 100% of their time and wages towards that R&D number. So this is just generally what I was talking about as far as whenever you're sitting down to look at what qualifies for R&D. We go through that 4-part test. If you want to learn a little bit more about that, the IRS, the IRS section code, Internal Revenue Code, section 41 describes in detail what qualifies for R&D. It's really good light reading if you are struggling to fall asleep. But in general, it's those 3 QREs, those qualified expenses that I just talked about in those buckets. And the best thing to do is just really look at each of those categories, look at all your employees and spell out, how much of their time is spent. Now, if they are doing timesheets, if they do multiple things or work on different projects, that's the easiest way to track when they're spending in R&D versus what they're spending in other activities for you. But you can use, percentages of their time and follow that up with their W-2 for the year, detailed lists of the supplies and what they were used for, and then the list of the subcontractors. For the Pennsylvania program, I listed all of that stuff out because they do require that you input the name of the company or the individual's name in their social if it's an individual that you hired as a subcontractor when you're doing that application. We created this research expense organizer online. It's that email or web address there at the bottom of the screen. It's www.researchexporganizer.com. And that will kind of walk you through, all of those things to kind of generate what you're spending in R&D. So there is a federal tax credit that you can qualify for. As I said, that program started back in the 1980s, and just 3 years ago now, they changed it and made it a permanent part of the tax code. So every 2 years it had to be up for reallocation, but now it's a permanent part of the tax code. The big key thing to note is that if you are a small business, meaning for the federal purposes that you have less than an average of 10 million in sales, then you can use those tax credits that you generate federally, not just on your corporate net income tax that you pay federally, and not just on owners' taxes that is not subject to AMT, but owners who do have AMT are subject to the alternative minimum tax can use that credit. And small businesses can use it against their payroll taxes. So when you're filing your quarterly payroll reports, you can use that federal R&D tax credit against your employer portion of that payroll tax, and have, you know, very significant refunds back from that, and use up those credits. These credits do carry forward for 20 years as well, so they are an asset to you. Anything that occurs within the United States for the federal credit counts. So you can have subcontractors in any of the 50 states, and they would count. There's no cap on these credits. There's two ways you can calculate it. If you're a young company, you can do the traditional method usually, and it's okay. If you're an older company, sometimes it's easier to do the simplified method, so you don't have to go back as far to the beginning of when you did any sort of R&D. But in general, the average amount that you receive for federal credit is, if you look at your R&D expenses, because there's a base that you have to generate it to, it's about 6.5% or so of what you spent on R&D for that year would be your federal credit. So that happens right on your tax return for the federal. It's a 6765, and most accountants are aware of it or have some experience with it. We work really well with accountants because I'm not an accountant at all. I'm not an accounting firm. I can explain this, and then they take it from there and put it on the return. The state program is separate from the taxes. It is an application that is also due September 15th. Again, hard and fast deadline, no extensions, no changes there. The PA looks at the increases in R&D spending. If you're just now starting to report, it's year over year. But as you are in the program longer, you average your base years together. So it kind of keeps that average baseline down a little bit. You apply online using Pennsylvania's eTide system, and they do require that documentation. Like I mentioned, you fill in information about answering the 4-part test, as well as the information about your subcontractors and everything. They have to verify that all of that spending occurred within Pennsylvania, that you don't have subcontractors from Ohio or California or even overseas. It has to be occurring within Pennsylvania. There is a cap on the Pennsylvania portion. So there's $55 million available each year. That they far exceed that in the applications that they get. They're really large companies, J&J, Pfizer, those types of companies that could eat up that whole amount, in any given year, really. So they've set aside $11 million for small businesses. Pennsylvania looks at a small business as a company that has less than $5 million in assets. So you provide your balance sheet to show that you're $5 million in assets, and then you get allocated as a small business, and $11 million of the $55 million cap is set aside specifically for the small companies. So you're only competing with other small businesses. The other benefit to being a small business is you just doubled the size of your credit that you can get. You can receive a 20% of that increase for R&D credits versus a 10% credit for the increase in spending that large businesses receive. Now, again, the program's oversubscribed for both the small business side and the large company side. So they allocate equally. Everybody that is qualified to receive this credit, everybody gets a fair share percentage of what they requested. It ranges. Sometimes it's as low as about 50% of what you asked for that you receive. Sometimes it's as high as 75 or 80% of what you ask for. It just depends on the year and what kind of R&D dollars were being spent. These credits, again, do carry forward for a good amount of time, 15 years. They can be used just like the KIZ for your Pennsylvania corporate net income taxes, or flow through to the owners for personal income taxes. And again, they can be sold for cash. There's no age limit for an R&D credit. Any company, you can be 50 or 100 years old. If you're doing something innovative and developing stuff, you can go after these R&D credits. If there are no questions so far on the R&D program, I'm just going to really quick go through how you claim a credit, because it is a complicated process a little bit. So to claim the tax credit on the tax return, you do have to, and an RCT 101 is listed as a restricted credit. And then you fill in this claim form to the state that you're using it at your corporate level for the amount of liability that you owe, and the state applies it. When you're passing through a credit to a shareholder or an owner, and again, it can be any type of entity that can receive these credits, a sole proprietor, as well as an S corp or partnership, any type of for-profit entity. Same with the KIZ program. You can only pass it through one level. So if an LLC is owned by another LLC who then has end users who have PA tax liability, you can't pass it through. It doesn't follow the path. It can only go through to that first level and then be used there. So if you try to pass it through and they can't use it, then it's lost. If you need it to get to that end user, you have to go through the sale transaction process. And there's different rules and regulations to how much a buyer of a credit can use versus a ownership pass-through. It has to be pass-through based on the percentage ownership. So 100% owner, that's simple. They can take as much as they need each year. If there's 50-50 partners, they have to take equal amounts each year. And then if it's broken up into much more complicated structures, you have to only pass through what each owner can use up to their percentage point, and it has to be equal up to their percentage point. Once the credit is passed through, there is no carry forward, so you have to use it in that tax year that you passed it through for. And if you are married, you have to file your PA tax return separately, so that it is only going against your income. And not also your spouse's income if they have separate income. And that claim form does have to be completed and either mailed or faxed into the state separately. They just recently started allowing emails for that process as well. To sell a tax credit, and this is any tax credit, once you're awarded those credits December 15th of each year, you have to file that next filed tax return. So in this case, anybody receiving a 2020 tax credit had to file a 2020 tax return before we can start the sale process. We help with that application. We identify the buyer for you and fill out all that paperwork and then submit that to the state. You do have to be tax compliant with the state. So all of your tax reports filed, no missing, withholding on any quarterly reports must be paid and filed as well before they'll approve a transfer of a credit and before they'll approve a tax credit itself. The state doesn't facilitate connecting buyers and sellers. That's why, one of the reasons we got into this business is to try to help people make those connections. And we're aggregating those credits together for you. And then the state can take 60 to 90 days to process that sale of the transaction. So they're doing that compliance check and then manually moving the credits at that time. So this is not necessarily the fast track to getting money, but once you file your tax return, as long as you don't have a compliance issue, in about 2 months, you can expect to get your money back from a sale process. We do work with banks and investors who can sometimes pre-fund and loan, do like bridge loans against the tax credits, using them as part of the collateral package. So that's just a nice way to kind of foster those types of relationships as well, if you need to grow a relationship with a bank. There are many other programs that we are not going to get into today, but lots of things that are going on in the state. There's also, we work with a lot of angel investors. So these small companies that are doing these types of work, these angel groups are really interested in those. So any questions there, let me know. And then this is just, again, a little bit about us. We assist with all of the applications for these tax credits. We have buyers who are looking throughout the year. Pretty much every month I have sales and usually multiple sale opportunities each month. Because our company started as an accounting firm, we have a good knowledge of the tax code and the guidelines and who to work with at the state. And we always operate on a success-based fee. So we are not taking any sort of retainers or anything. We are working for you to get you the best price and the best application and to have these credits be awarded so that you can get that money and into your business to grow. And our fee is not due until all of those success measures are met at the time that you sell the credit. So that's really all I had. I hope I did okay on time. Yeah, we got a few minutes left for questions. So feel free if anybody would want to. I'll go ahead and stop the share. And if anybody would want to unmute and ask a question, feel free. Or did I put everyone to sleep?
No, this is great, Lindsey. So are there any questions in the audience there that would like to unmute for her? This is a really good way particularly for the tech startups, and as there's a broad room in what R&D is, particularly on the R&D side, but the KIZ and the R&D working really well together for new companies in the KIZ zone, and R&D is not limited to any zone, but really a way to beef up your assets. I mean, being able to hold on to some of these credits for a period of time as an asset is very worthwhile. And certainly when the entrepreneurs are going through rounds of funding, and they're trying to find some funding gaps for build outs and such, a lot of these tax credits can be used in putting together their assets and collateral, even in trying to go for their loans. So we've seen that to be very helpful to some small businesses at the URA that have applied for easy tax credits as well as the IZ. And so I would encourage everyone, if you can take advantage of these or know someone that can, please let them get in touch with Lindsey or ourselves and DCED and take a look at this webinar and work through that application process. And these applications, again, Lindsey, are like June 1, I think, for the
R&D will open around June 1st for Pennsylvania.
Through September, is that correct?
Yep, through September 15th. And the KIZ application usually opens in July timeframe. They usually give about 6 weeks or so. Well, I guess 6 to 8 weeks if it's July, the middle of July through the beginning of August when they'll open the round, and it will be due September 15th. And again, you do have to have those tax returns filed. So I know extensions for taxes can go through October 15th, depending on what type of entity you have. But to apply for these credits, you do have to have filed 2020 tax returns to anybody to file wanting to go after an application this year. So just keep that in mind as you're preparing your tax work for your accountant, that it does need to be done before September 15th if you're going to go after these programs.
And I had a question on being a small business and able to get 20% of your versus a large business. Is the breakdown on small to large the SBA definition of small business, or how's that broken down?
Pennsylvania defines it as having less than 5 million in assets. So you provide a balance sheet, a current balance sheet that shows your total assets. And if it's under $5 million worth of assets, then you're considered a small business for the R&D, Pennsylvania R&D purposes.
Wonderful. Well, you've still got a couple of more minutes here of this expert's time. If you would like to, if something arises for you to ask. I don't see anything in the chat. And let's see, did I hear a voice there?
No, I was just saying thank you to David for his comment. Hopefully it flowed through everything well, what you need to know.
No questions, but thanks for the song. Excellent. Okay, Lindsey. Well, I want to thank you for being part of this URA webinar series that we've done over the last couple of years. And it's really been helpful. And I know so many people that have utilized these on the URA website, particularly when they're filling out applications and going back as a resource later, and for those that weren't able to attend. So I'm very grateful to you and all of the applicants that we work with when we're involved with the technical questions and things we're trying to figure out for submittals. I really appreciate you being available and willing to work with them and assist them, and being able to, broker the credits they receive and help them do some of the monitoring. I believe you do over time for a couple we've worked with for the reports that they have to put in. So those services are really so valuable on the front end. And like you say, if you don't get the award, there's no cost for the assistance up front. And I just really appreciate all your
everybody's time. So we're not going to take you down a path we don't think you're going to get to a successful credit. We want to make sure that you understand what you're going after, and that's why we don't charge a fee up front, because if we're doing the work, we're feeling confident that you're going to get to that end result.
Well, we're at 1:59 now, in case any participants have a hard stop meeting coming up. Lindsey, again, I thank you. I thank everyone for attending. if you have any questions, please contact me. You can certainly reach out to Lindsey, and I'll help you any way I can. So Lindsey, thanks so much, and
Thank you
we'll
again.
see you soon. Thank
Sounds
you.
good.